Hello and welcome to Chapter 3, Cost Behavior, Analysis, and Use. In this chapter's mini lecture videos, we have two learning objectives. The first, describe how fixed and variable costs behave and how to use them to predict costs. And number 3, which is your second learning objective, prepare an income statement using the contribution format. Now, this is the first chapter where not all learning objectives are examinable, and this directly corresponds to your syllabi. Hold on while I grab that for a moment. Okay, so this is your syllabus, because it's singular. Apologies, not syllabi, but this is your syllabus, and so you'll notice that first 2 weeks, Chapter 1 and Chapter 2, all of the learning objectives are examinable, and yet here, Chapter 3, only 1 and 3 are examinable. So within Chapter 3, this is where we start to build on Chapters 1 and 2. And so we're really focusing in on going for depth on those learning objectives before we start layering on in Chapters 4 and 5. So just want to show you, excuse me, where the slides are corresponding to your chapters and what is examinable to help ensure that you're not reading more than you need to or studying more than you need to. It really just helps align our goals for you in this course with ensuring that you do sufficient work, but not more than is necessary. Of course, if you decide you want to read more and you want to have discussions about different topics, we are happy to do so with you. However, we understand that most students likely would not want to learn, quote, extra at this point because anyways, so we appreciate that for you. Learning objective 1, describe how fixed and variable costs behave and how to use them to predict costs. So in Chapter 1, we talked about just in general laying the foundation, what's managerial accounting, what's financial reporting, how do we use the same types of behavior, who are our users, why are we doing this, how are they similar, how are they different. From there, in Chapter 2, we talked and introduced variable and fixed costs. And here, we go and really leverage on where our variable costs are costs that change per activity level, and within the relevant range, they're the same cost per unit. And inversely, fixed costs remain the same even when activity levels change, whereas average fixed costs go up and down as activity level goes up or down. Take a minute, pause the video, and think of if you can pull in from your own life some examples of variable and fixed costs. Okay, so as a student, one of my highest variable costs was coffee. So the dollars per coffee charge remained the same no matter how many coffees I purchased, yet my total money spent on coffee increased as the amount of coffees I purchased increased. And interestingly enough, the more early morning classes I had, the more coffees I purchased, and therefore the more I spent on coffee. So when in my later years, when I started working in my co-op jobs, and then when I stayed on part-time with some of my co-op employers, it was really great when I could split my day and work, say, mornings, a few days during the week with my employer, drink their free coffee, and then go to afternoon or evening classes. Not necessarily by design, but also a pretty cool benefit. Because I'm an accountant and I don't mind spending money where there's value, but free is for me. Okay, fixed costs. Fixed costs would be like office hours, something that I don't want to call it like a big regret, but it's something I didn't utilize very much as a student. I wasn't aware where they were. I wasn't aware how to contact my profs. I don't believe that they ever put that on their syllabus at the beginning like we do. Hint, hint, nudge, nudge. This is us. Come see us. Breeze and B-Shoes are posted in the weekly news chat. I'm available via appointment, and Professor UTN is in person Tuesday or Thursday, 1 to 4 p.m. Anyways, just want to double check that we're recording the right thing. One moment. Well, usually we have a nice little green box around what we record. This might just be me talking to myself. I've never seen light of day. Anywho, so I never really utilized office hours. Not a huge regret, but still a regret nonetheless, because I don't know how much easier or how much better my experience could have been, or at least I would have known, okay, like that was for me, or okay, that wasn't for me. And why I bring this up is because not only do I want you to see us, but because the amount of your course cost and tuition this semester stays the same. It's fixed within the relevant range of how many courses that you have and the fixed fees this semester for any ancillary costs. However, if you see us a lot, so maybe your cost per class or cost per, even though it's fixed office hours, if you say associate 5% of your fixed costs in your head and you allocate it to office hours, that cost goes up or down so if you use them 0, then your cost per use is that like 5% that you allocated. But if you see us a lot, then your cost for the fixed cost goes down. So cost per office hour use goes down the more that you use it. Now, some of you might be like, well, that's a sunk cost. And that's true. Absolutely. However, that's a sunk cost when we think about going forward. Should we consider the amount of office hours available for whether or not we take certain courses? And perhaps qualitatively we do, but quantitatively, we maybe shouldn't, because it doesn't vary per course. However, when we've already when we've used it and we're kind of thinking, okay, what's the cost behavior? Understanding what the average cost per use is relevant when just understanding what the cost is per unit. So not when you're making decisions per alternatives, but when you're just trying to understand the differences between fixed and variable costs and how the relationship is to one another. All right. So friendly reminder, when you have a variable cost, you have cost drivers. So for me, it was how many morning courses do I have? And then what causes my coffee consumption to go up or down? Well, it's the number of morning courses that I have. Therefore, morning courses was a cost driver for my variable cost of coffee purchased out. It could be if you're taking an Uber, I believe they have a fixed fee as well as kilometers driven. So the kilometers driven portion would be part of the variable cost. And if you are thinking about, say you're a manufacturer for Sephora, say you're MAC Makeup, the amount of lipsticks that you produce or mascaras that you produce, the more that you produce, the more units that you produce, the higher your variable costs will be. Other examples, and really the proportion of variable to fixed costs differ across organizations. For example, a public utility company like an NMAX or what else? Like an ATCO Electric, a public utility company with large investments in equipment will tend to have higher fixed costs and few variable costs. And that's largely just because I know that when I was at ATCO Pipelines, like our pipe was over $1 billion. So it's because the fixed costs are just so high. And the pipe is considered to be a fixed cost because within a relevant range, they weren't building more pipe throughout the province. A service company will normally have a high proportion of variable costs. Absolutely. So if you are in an esthetician studio, you're going to have the more clients that you have, the higher your staff costs are going to be. Those are variable. The more clients that you have, the more product use that you're going to be using, the more like makeup or wax or whatever your kind of inputs are. So a service company will normally have a higher proportion of variable costs. Whereas a merchandising company, remember those from the last videos, that was our Walmarts, that was our Best Buys. They'll usually have a higher proportion of variable costs, like cost of goods sold. So, for example, at Best Buy, your cost of goods sold would be the cost of computers, the cost of televisions that they buy from other manufacturers and sell and charge a markup. Similarly, a manufacturing company like a Volkswagen or Midday Squares will have lots of variable costs because they're producing stuff. They're making and producing stuff. So the more they produce, the higher variable costs they will have. So within variable costs, there's step variable costs. And step variable costs are the cost of a resource that is obtainable only in large amounts, such as maintenance workers, and that increase or decrease only in response to fairly wide changes in activity. So we're saying that the cost per unit stays the same until we need to bring out a second crew. And then once we have the second crew, the cost will be relatively the same until we need to bring out a third crew. So for example, the number of maintenance worker employees employed is not likely to change within small changes of the level of production. So maintenance workers, it might be the amount of maintenance workers used to clean and maintain a school. Within a certain number of candidate registrations and programs, you're probably good to have that level of maintenance workers. However, what if you double the number of programs? What if you double the number of students? What if you double the amount of hours on campus? Once that activity level increases by a certain number of units, another maintenance worker or workers will be added. So whether it's an additional maintenance worker, or if you need to bring in a second crew to perhaps do an overnight clean, just depending on what your activity is. So that was a revisiting of variable costs. When we revisit fixed costs, for example, monthly rent for business is typically fixed. The monthly rental does not change based on the number of units made. The average fixed cost per unit decreases as more units are produced. However, within that relevant range, the monthly rent stays the same. Now, there are a couple different types of fixed costs. We have committed fixed costs and discretionary fixed costs. Committed, as the name indicates, are long-term, cannot be significantly reduced in the short term, and examples are depreciation on equipment and real estate taxes. Discretionary fixed costs may be altered in the short term by current managerial decisions. Things that you can control. Examples could be advertising and research and development. So if they are short-term and could be altered by managerial decisions, this means that they are relevant to your decision-making. They're not discretionary or kind of in your control, and committed are at least in the short term outside of your control. So something to keep in mind. The trend in many industries is towards greater fixed costs in general relative to variable costs. And that is because many of the tasks that used to be performed by by humans, often paid hourly wages, have been automated. The rise of AI, artificial intelligence, has devices or systems performing intellectual tasks, and I'll kind of like put that in quotations, at least has automated redundant tasks, has automated automatic tasks that were until recently required human intervention. So I'll give you an example for the audit world. In audit world, if you went to a Big Four, it was very likely that your first 3 months as a intern, co-op student, first-year associate was going to be spent auditing cash. And at company, I thought the companies had like 1 or 2 bank accounts, like regular humans. Some companies have like hundreds, tens or hundreds of bank accounts, different currencies, different subsidiary companies, different interest rates, different purposes. Like they just, like, oh gosh, it's a lot. So you might spend 3 months as a junior associate auditing cash. Well, a number of those elements that we used to do can now be automated, which means that juniors are now doing more. And think about it, like you have 2 years of experience, 4 years of experience, etc. in your education, and then you go and you're auditing cash, which we learn essentially week 1 of your first intro course. So there's a big disconnect typically in the amount of skills required and the amount of skills hours spent auditing cash. So with AI, that has largely eliminated that, and junior accountants tend to do more sophisticated items, more in line with their actual degree. So while it might be controversial, AI is replacing jobs, if anything, it's really elevated the amount of skill required, amount of interesting work, and really helps you as you're training to be an accountant, because you want to experience what you're experiencing in work aligned with your professional examinations, so that you really get the skills, learn it, move on, and go make a bunch of money. Or use your skills and make a difference in the world, or use your skills, make a bunch of money, and make a difference. So whatever your kind of goals are. Anyways, that's my TED Talk today for why AI is okay. Although, you know, I do recognize that the elimination of jobs is scary. There's also the opportunity that, especially for people investing in their education, such as yourselves, that it will lead to more interesting work. So within that, within the rise of AI for performing some of those redundant tasks, this replaces hourly variable wages with fixed costs of equipment and system software. I would also argue, though, that that's a simplistic version. There's going to need to be sophisticated workers to build and oversee these systems, as well as to monitor their success and to consider future technological implementations in the future. Okay. So both variable costs and fixed costs have the relevant range. Within the relevant range, that's where you got the step variable. And here within fixed costs, we have a relevant range as well. And so the relevant range of an activity for a fixed cost is the range of activity for which the graph is flat. Boom. And so we refer to each one of these lines as the flat part, the relevant range. For example, office space is available at a rental rate of $30,000 per year in increments of 1,000 square feet. As the business grows, more space is rented. Literally, it could be just a giant office building where they knock out walls and combine the different offices, or you go from having, just floor 7 to now you're in floor 7 and 9. So as the business grows, more space is rented, increasing the total costs. The type of fixed cost differs from step variable costs because fixed costs have a wider activity step and cannot be adjusted as quickly as step variable, right? You're not just knocking out walls and adding on a floor as you get one more employee. Nah, you're going to stick the other employee. You're going to hotspot desks. You're going to, have shifts. You're going to do what you need to do. It's not like you're adding an extra course in the morning and need more coffee. That's variable. It is literally going to be busting through walls. So within that, professional judgment is needed. So understanding the underlying definitions and how they're used will help provide you with confidence to make those professional judgment decisions. And with that, let's do a quick check. Which of the following statements about cost behavior are true? Take a moment, pause the video, and choose all that apply. Welcome back. If you said fixed costs per unit vary within levels of activity, you are correct. Fixed cost unit per unit vary with the level of activity. Yep. Variable costs per unit are constant within the relevant range. Variable costs per unit, yep, constant within relevant range, absolutely. Amount of coffee that I spend, per number of coffees that I purchase per unit, yep, are consistent within a relevant range, absolutely. I'm sure that relevant range is, in fact, really, really large as far as coffees go, because no matter how much coffee I purchased from Tim Hortons as a student, it was always whatever it was at the time, $1.75, $2.05, etc. All right, total fixed costs are constant within the relevant range. Yeah, so within the relevant range of office space, the total fixed costs are going to be constant. Yeah, it isn't until I add in that 300th employee, I need to get the additional floor, that we start increasing fixed costs. Total variable costs are constant within the relevant range. So no, the total variable costs do vary because total variable costs are the variable cost per unit times the number of units. And so we know that variable costs by the nature, more morning classes, while the cost per coffee stays the same, the total cost of coffee will increase. All right. So if you made a mistake in any of those, that's okay. We are all learning. Post to the discussion board and comments. Come see us during office hours and perhaps do some extra practice from the book. And don't worry, again, I definitely learn more when I miss something and I have to go back and be like, oh, but why is this the case, right? Thank you so much for your attention. I will see you in the next and last video of this chapter.